What is systematic investing and why use it? So the question you might be wondering is, what does it mean to be systematic? What does it mean to be a systematic investor or systematic trader? Well, being systematic simply means having a structured process that governs how an investor or active trader analyzes the market, as well as a consistent and repeatable way for acting on or implementing that process. This typically happens on a regularly scheduled basis. Being systematic usually means having checklists and well-defined setups or trading rules that govern when a trade is taken. So a systematic trader will have specific trading rules for what to trade, when to enter into a trade, and when to exit out of a trade. Everything is predefined, specific, and not open to interpretation. A systematic investor is more likely to check the boxes of their trading checklist before plunging headfirst into the markets. No different than a pilot would have their pre-flight checklist to avoid life-threatening mistakes. Being systematic means taking out most of the discretion and last-minute guesswork from the real-time process of trading and investing. There is zero guesswork. This results in much less stress while trading. Because of the nature of systematic investing, the trading rules can be programmed into a computer, and a simulation or backtest can be run against historical market data in order to find out how well the trading strategy performed in the past. Although past performance is not 100% indicative of future performance, it's the best guess that we have available to us. This is important because it helps to remove the emotional impact of investing, which can lead to faulty and irrational decision making and errors. The investor is very clear on why they entered into a position, including the entry location and possible exit locations or reasons for exiting. It helps to quantify everything so that we can remove fear and greed, the two big profit killers. The systematic approach benefits a trader or investor because, as we know, trying to make a decision while in the heat of battle and during fight or flight mode, mid-trade when things are not going as planned, can be a recipe for bad decision making. Ditto during the euphoria of a really good trade. Having a specific set of rules and defined process is much easier to execute, and the systematic trader can have more confidence in the decisions being made because the strategy has been backtested and quantified over a long enough period of time and over a large enough sample size of past trades. The systematic investor has learned to take all of the individual steps and moving parts and combine them into an investment process to better their odds of success. Being more systematic allows your investing activities to be process-led, thereby forcing a more organized and consistent approach. Consistency leads to success, provided that you are consistent with a consistently successful strategy that has a verified edge. This is something that we focus on heavily at the Systematic Investors Group. Systematic trading or investing may be implemented manually, semi-automatically, or in a fully automated manner. At Systematic Investors Group, we focus on using technology to save both our members and ourselves valuable time. We therefore tend to focus on the semi and full automation route, saving time, not spending unnecessary hours hunting for and managing trades in front of computer screens every day, reducing input errors, and removing some of the emotional impact of investing. So in summary, systematic investing beats discretionary trading and all other styles of trading for most because it is a data-driven process with data-driven results. You'll be way more consistent, and consistency wins the race. You'll spend less time hunting for trades and less time managing trades. You'll have less stress and do it faster and easier. You'll also have the ability to scale up your trading to multiple strategies and using much more money if that is your goal. Because trading rules are backtested and quantified before trading even begins, you'll have more confidence because you'll already know what to potentially expect. And because systematic investing is structured, it can even be semi or fully automated so that you can execute your entire trading plan in 5 minutes or less per day.